Welcome to the webinar today on the evolution of information sharing in countering financial crimes, what enterprises can learn from private information sharing. My name is Michael Sampson from Osterman Research, and I'll be your moderator for today. Feel free at any point to ask questions in the chat window, and time permitting, we will answer those at the end of the session. Osterman Research is a market research and consulting firm focused on areas like cybersecurity, data protection, and information governance. However, for the focus of today, we are joined by Nick Maxwell, who is the head of the FFIS program. I'll get him to define what all of that means because it sounds sort of secret sauce, and is also the author of the study that we'll be focusing on today, as well as Ronan Cohen, who is the Vice President of Strategy for Duality Technologies. Welcome, gentlemen, to this.
Thank you.
Thank you, Michael.
I wondered, Nick, if you could give us a bit of background about yourself and also define that little acronym for us.
Yes, well, as anyone who works in this field knows, we're blessed with many acronyms. So our organization contributes to that acronym soup. I lead the Future of Financial Intelligence Sharing Research Program, the FFIS Research Program. Not content with that, we operate within the RUSI, RUSI, Royal United Services Institute Center for Financial Crime and Security Studies. So quite a mouthful, but in the AML, CTF, CPF world and beyond, there's surely room for some more acronyms.
Awesome, and I can see the Oxford Dictionary of Acronyms in Financial Services on your bookshelf behind you. Looks like you're using that quite significantly. Nice. Ronan, welcome. Tell us a little bit about being VP of Strategy, please.
Sure. Thank you very much, Michael. I lead strategy for Duality, which is a role around identifying and understanding what are the different problems that we can solve with privacy technologies. I also lead regulatory relations for the company, so privacy regulators, financial crime regulators, and beyond. And I too, like Nick, have a background in financial crimes, particularly around financial crime investigations.
Nice. We actually have articles in our local newspaper down here in New Zealand at the moment on AML and financing terrorist things. So it's interesting that the timing of this webinar and the emergence of those topics down here.
It's probably not a good sign, but hopefully we can be helpful.
Well, there are definitely some big issues around how do you identify malicious actors within the system, but then also how do you identify people who are acting with right intent but still flag those signals or triggers that make the financial system believe that they are acting with malicious intent. We may or may not get to that. Okay, so for years, Osterman Research has been looking at the role of privacy. And for example, we've just released a report that Duality was involved in called Privacy Compliance in the United States, Status and Progress in 2022. It was a cross-industry, multi-industry piece of work based on a survey to look particularly at how organizations were getting ready for the new state-level privacy regulations and what they could do from a process, practice, and technology point of view. In this session, however, we are focusing on a very specific part of privacy that impacts data sharing across financial services, organizations, and the industry. And we want to see if there are any commonalities to draw for any other verticals or enterprises that are looking to solve the privacy preserving data sharing issue regarding what information they can share and why they can share it. The conversation today is informed largely by Nick's paper on this topic. It's quite a big piece of work, and we will only be touching on a small portion of the ideas in that report. Nick, that report is almost ready to be published, I believe. And do you have a time frame for releasing that?
Yes, well, the Financial Action Task Force, which is the international standard setter, are meeting for their plenary meetings in Berlin in June, just from the 13th of June onwards. So we'll be launching in and amongst that plenary activity.
Right. Okay. Yes, I had a look through it yesterday. It's just under 100 pages, and I think we'll probably be touching on about 3 or 4 of those pages in the session today. So there's a lot more data that you can learn from the paper that Nick and his team have put together. So Nick, talking about that paper, let's start with you for the session. Can you explain a bit about what FFIS does and the origins for this study?
Absolutely. So within the FFIS research program, we're interested in the processes, the organization, and partnerships of information sharing. So we're interested in public-private information sharing and private-private information sharing, and the contribution that those processes are having towards more effective outcomes, more secure outcomes in the anti-money laundering framework. If we kind of step back a little bit, the anti-money laundering framework is really established by FATF over 30 years ago now, and it puts a lot of responsibilities in different places. It put responsibilities on the private sector to look at their own business and identify financial crime risk and suspicion of money laundering and other offences. It puts responsibility on public agencies to process that information, to investigate, to prosecute, and it creates a supervisory structure for this whole process as well. So in the past, there's been very little information sharing, and what we're interested over these last 5 years or so has been research, international comparative research about how processes of information sharing are developing in different jurisdictions. And in this study, we're particularly interested in private-to-private information sharing platforms.
Right. And so when you use the phrase public-private information sharing and private-private information sharing, can you explain briefly what the difference is between those two, please?
Yeah, it might be helpful again to kind of think of first principles. So if you are a financial institution and you are, trying to meet your obligation to identify crime, money laundering and other offences, it can be very challenging. So you might be sitting on a lot of transaction data, or you might be another type of regulated entity that doesn't necessarily have transaction data. And you have to identify, what is the crime here? How can I find behavioral indicators or transaction alerts to indicate criminality? That's very, very difficult in the absence of information sharing. So in the absence of public to private information sharing, the private sector can be a little bit lost about, okay, what should we be looking for? When public-private information sharing takes place, it can often support regulated entities to work from subjects of interest, in some cases, to law enforcement, so to an active law enforcement investigation, for instance. It could also be dialogue at a strategic level. So public agencies may be talking with private sector entities about the trends and broader typologies they're seeing when it comes to certain financial crime threats. And that has been shown over these last years to tremendously enhance the effectiveness of the overall system and the responsiveness of private sector organizations to really what the public agencies are looking for in terms of their interests. In terms of private information sharing, what we're really talking about is when one or more financial institutions, 2 or more financial institutions can collaborate to share information. Again, it could be strategic, but we're particularly interested in this study at looking at customer information, sensitive information, traditionally protected information, and how that information can be shared in safe and secure ways, how it is being shared to help support the identification of risk which spans across multiple financial institutions. And the problem is, well, almost every money laundering organized effort does span multiple financial institutions. So it's very difficult to see that full picture just working in isolation.
Isn't it? I would recommend to the audience to have a look at the paper, which brings out this idea that those involved in money laundering don't just focus on a particular financial institution and do all of their transactions through there. They are deliberately setting up multiple accounts across multiple institutions, across multiple geographies. And in the absence of information sharing, that systemic level insight into what's going on is very, very difficult to see. Great. So thanks for defining those. Ronan, I'm going to come to you now. So Duality has been championing the combination of cryptography and data science for quite some time around the sharing of sensitive data. Can you talk to us about your view on this and where those ideas have come from?
Yeah, I mean, I think both of you said it really well. Risk sits across different organizations and insights sit across different organizations. I recently read a statistic in Forbes where in the United States, Gen X and millennials typically have between 30 to 40 different relationships with different payment providers, financial providers, et cetera. More typically, I think a typical American has 6 to 7, but what that means is that any one financial institution or payment platform or app or whatever it might be that they're working with doesn't really know them, doesn't know them well. And that has implications across the customer lifecycle and for the business of the financial institution. How can you effectively market to people who you don't know, develop products for them, and how can you effectively mitigate risk, which is exactly what Nick was talking about with money laundering and with financial crimes in general. Now, there's been historic challenges to sharing that sort of information and building an industry-wide view. Some are regulatory, and Nick addresses many of those in his paper. Others are competitive concerns. Others are cultural. It really runs the gamut, but that's why there's a whole new class of technologies and other methodologies that have arisen in order to address these types of challenges and address these needs from the industry.
Thank you. Thank you. Now, you've mentioned the regulatory framework and legislation. How does this come into play for data sharing and private-to-private relationships? What does that look like? Nick?
Well, what we've brought together in this study is a survey really of the current landscape around the world with regards to private sharing on economic crime. So we look at both anti-money laundering issues and platforms that focus on anti-money laundering, but we also look at fraud prevention and information sharing platforms which support fraud prevention, and of course platforms such as Duality and the 314B Association that Duality support information sharing that can cover both fraud and anti-money laundering, and a number of platforms straddle those two domains of economic crime. And while it might seem quite obvious as we say it now that risk spans multiple institutions, and yet historically our detection systems have really been siloed in individual institutions, it's quite hard to break out of that status quo. And it's only in relatively recent months even, but certainly in the last 2 years, that we've seen quite a lot of innovation in this space. So we've seen a number of information sharing platforms establish themselves. We've seen some attention from the international standard setter, the FATF, the Financial Action Task Force, on the use of collaboration to identify financial crime risk. And so what we do in this study is we really survey that growth. And what we find is a tremendous variety. We see very, very different types of platforms using different types of technology, having different visibility over the data, requiring different types of data from their members, and delivering different capabilities actually to identify economic crime risk. So we really just tore through how those different platforms are working.
Right, thanks. And so in your part of the world, GDPR is a fairly big issue that restricts what organizations can do with the data they've collected, requires a legal basis in order for it to be used. Sometimes that's consent, but the regulation does allow other forms. Does GDPR prohibit private-to-private information sharing in financial services to do anti-money laundering and countering fraud?
It's a really interesting question. So, you know, on the face of it, you might feel that there is a conflict between the principles behind GDPR and the principles behind the anti-money laundering system, because essentially GDPR is a data minimalist regime where the only what is necessary and proportionate should be shared, and data should be minimized in wherever possible. Whereas the anti-money laundering regime is actually a data maximalist approach. So to identify risk most effectively, you need actually to draw in a lot of information. And the more information you can draw in, the more effective you will be at identifying that financial crime risk. And indeed, the fewer false positives you'll have, the fewer innocent persons that perhaps might be flagged up for risk. So there is a real tension there at a kind of conceptual level. However, what we have seen is in these recent years, in these recent platforms, a number of platforms have developed in GDPR jurisdictions, and so there isn't a kind of mutually exclusive characteristic for private sharing. It doesn't have to be in conflict with GDPR, and in fact, these platforms are obviously in compliance with GDPR. What we see is interesting is that they use different approaches. So some platforms operate under a public interest legal basis within GDPR. Some operate within a legitimate interest, which is more of a private sector perspective on legitimate interest for a private sector entity. And some operate under a basis of compliance with law. So that means that there is a separate piece of law which enables that type of information sharing. So again, we see that variety around the world or in GDPR jurisdictions.
Right. So what I hear is that while GDPR and AML and anti-fraud actions can appear to be at odds, it requires a degree of policy setting within a financial services organization to say, how do we make this work, and how do we make this work if we're now sharing with others?
That's absolutely right. And in fact, the June FATF plenary meetings this year, the presidency country is Germany, and Germany has a reputation as a strong privacy center when it comes to its legal regime for data privacy. However, they've really sought to bring together throughout the course of the German presidency of FATF, data privacy stakeholders, data protection authorities, and financial crime policymakers to really discuss these issues. And again, you might think that should be kind of obvious as something that's required, but actually, it's only been happening in these more recent times, and that's been tremendously fruitful because obviously jurisdictions want to ensure that their citizens' data is handled appropriately, but they also want to ensure that they can address financial crime threats that are facing the country and defrauding citizens and attacking citizens in various ways. So they both need to work, and they're both important. So we see that need for a joined up policy perspective as absolutely critical to make the most out of the power of collaboration.
Thanks. So Ronan, we've talked about policy and we've talked about collaboration of data and private information sharing. What would you say to financial services organizations about the policy questions they should be asking themselves?
Well, I think as Nick made apparent in his answer, there's a lot of nuances and a lot of paths one can choose. But there are many very legitimate justifications for sharing this sort of information. At the end of the day, it's protecting your business, it's protecting your customers. It's, when you're looking at money laundering and counter-terrorist financing, it's protecting national security. So those are kind of like the high-level considerations on why to do it. In terms of what to ask themselves, obviously, they need to ask themselves, what are the laws that exist that allow them or disallow them from sharing information? What are their business policies or business concerns that would allow them or disallow them from sharing information? And then more tactically, once you get past those, thinking about, really going down almost to like the field level, what information can I share? Do I want to share? Who do I want to share it with? And how do I want them to use it? Because, at the end of the day, in a sense, you're a fiduciary of your own client's data, particularly in banking, right? So it really does need to get into that level. If you know, Nick, I think very eloquently put it. There's sort of the data minimalist versus the data maximalist approach, and so there are many financial institutions and beyond approaching with what is the minimum that I need to share in order to get the insight that I need, right? And that is one of the ways that we've seen organizations balance those two needs.
Right.
Yeah.
Sure. Thank you. And Nick, when you think about financial services organizations, governments, and regulators, what sort of recommendations are you making around private information sharing?
Well, the first is really to have that strategic vision about what capabilities a jurisdiction really wants to have to address its economic crime threats. Most of our framework, the international standards for anti-money laundering, were written in the 80s, and although there have been updates, of course, over the years, essentially some of the basic concepts are still the same when they were written in a time when it was paper banking and personal relationships were much more central. And now we are in this obviously huge world of digital financial services, digital banking, instantaneous transfers, cross-border transfers. It's an entirely different world. So policymakers need to understand, and I think your anecdote about the news today in New Zealand, another financial terrorist financing issue popping up. You don't have to go very far back in any particular country in the news to find a financial crime story, and in many cases a scandal about how this activity has been allowed to take place. Our systems that have been set up since the 1980s are no longer really fit for purpose. So policymakers need to consider how their jurisdiction can support more effective results, more efficient results, and less of a privacy burden actually on their citizens. And that is possible. We do see the indications that of greater impact and in some cases less reporting required when collaboration is possible. But the challenge is, in many jurisdictions, there is no legal gateway for that private to private information sharing. And even where there has been a legal gateway, for instance, in the US, the private information sharing gateway takes place under Section 314B of the Patriot Act. So it's been there over 20 years. But we're only really seeing in these recent last few years much more ambitious use of that legal gateway. And in part because of advances in technology, for instance, as Duality have demonstrated with their AML information sharing network, technology has been able to achieve greater security over the data, to minimize the amount of information that has been needs to be shared, and actually to address non-regulatory challenges that stakeholders have been experiencing, have been holding them back from information sharing, competitiveness concerns, or sharing sensitive information to stakeholders where there may be commercial implication. So these issues are being the subject of innovation. But from a regulatory and policy perspective, in most countries, there does need to be legislative attention to actually support collaboration, because it's not there in the international standards, and that has been a challenge to enable some of this activity.
If I may add, I completely agree with what Nick says, and I kind of visualize a triangle. There's regulation, and that's a necessary condition, and historically you've had process only, and now you have this addition of technology as well. And it's really the three of them working together that allow information sharing to happen at scale and in a repeatable way in a privacy protected, regulatory compliant manner. Because, as Nick pointed out, you can look back 20, 30 years at different regulatory regimes that allow for information sharing. Most of them have been, let's say, solely process or methodology based and not also incorporating that third leg of technology. And you've seen some successes, but really not the success that one would expect or one would want from those regimes. And I think 314B, Nick, is a perfect example of that. And so More recently, I think that we've seen technologies enter the space that enable and facilitate information sharing, private to private, public to private, whatever it might be. However, you still need that legal basis in order to do it, right? These technologies and these processes are not a way to get around the law. And so the participation and really the facilitation and support of regulators and of lawmakers, both on the privacy side as well as on the financial crime side or financial services side in general, are absolutely integral. And you can take the same concept and pick an industry, right? Whether it's healthcare or whatever other industry with sensitive data and information sharing needs, you still need those three legs, and you still need the support really of whatever government entity is relevant.
Right. So Ronan, if I just take one of the questions from the audience here, you've talked about technology and data collaboration. It sounds like you're asking a financial services organization to send an Excel spreadsheet with 1 million columns to the other to say, do you see any indicators? Is that what you're talking about? For how do we maintain privacy if we're doing that?
It's certainly not that.
Okay.
There are various different privacy tools out there based on different types of privacy technologies. Some that the audience may have heard of are secure multi-party computation, there's federated learning, there's homomorphic encryption, there's just general anonymization. These tools, depending on what it is that you're trying to accomplish, basically allow you to derive an insight from data without seeing the data itself. In some cases, the data is totally decentralized and it never moves. All that you're exchanging in a sense are questions and answers in a privacy protected way. In others, I think that are also covered in Nick's paper, data does move. It might be pooled together in a central location, but it's still protected. So no one can actually see the data, but different groups, financial institutions, law enforcement agencies, what have you, can query against it. They can run analytics on it without actually exposing the individual level data of Nick or of Michael or of Ronan or whoever that might be. So
well, we hope that none of us are in there, but yeah.
Yes, of course. I don't know. You just said there's been news in New Zealand, so who really knows, right?
That's right.
Well, the thing is, that does bring up an interesting point, because one of the variables for the platforms that we've studied is whether they can work on non-alerted data or whether they are restricted to some form of alerted data. So are they only able to share information that has been alerted to some degree by members of that platform or consortium, or are they operating on non-alerted data or transactional data? And there's quite a few platforms which are able to look at non-alerted data. So that means transaction data and seeing how that's connected across multiple institutions. And they obviously have a greater analytical opportunity to discover financial crime risk that isn't already understood or isn't already alerted in some way, and to see patterns which otherwise would not be observable if you were only looking at alerted data. So that's another way in which we see variation between practice right now. And in fact, we see different capabilities. Some platforms focus on messaging or queries. Some focus on really kind of bringing together an adverse database. So it could be exited customers. It could be fraudulent information that's associated to fraudulent attacks, confirmed fraud events. It could be that kind of database, or it could be a kind of collaborative investigation cell. We do also see that as a model. So there's a huge variety out there, and what we're seeing is really innovation, a lot of innovation, but we don't yet see governments, public agencies working with the private sector to say, okay, well, we have these huge financial crime threats. How do we want to best support these capabilities? And is the regulatory environment really clear enough to encourage its use? Thinking both about the AML, anti-money laundering regime, but also about data protection, also about competition law, to make sure that there's not this friction that might be holding back collaboration. If that's what policymakers wish to achieve, ultimately these are policy and in some cases political decisions, but we're seeing really that the private sector is really kind of innovating as far as they can within their legal constraints.
Excellent. Well, Nick and Ronan, I'm sure that we could speak for another 6 to 12 hours on these topics, but we are out of time for this webinar today. If you would like some more information on the paper from Nick's organisation, FFIS, then we will give you a link to where you can find that once that is released later in June. And for information on how Duality can assist financial organisations and the sector to uplift its privacy approach with data collaboration, then please visit the Duality website. And again, we will have a link for you to do that. Nick, thanks for your time. Ronan, thanks for your time. And we wish everyone in the audience all the best. For the questions that we didn't get to in the chat, Duality will reach out to you individually. Thanks.
Thank you.